apologize if I'm a little groggy. I actually flew into Bangkok yesterday from Vietnam for 5 days. Then last evening at 11 o'clock, I received an honorary doctorate from Kabbalah University for thank you for being on the board member of an online university for several years. That lasted till about 1 a.m. and then I got up at 3 a.m. to get to the airport to come see you guys with it. So if I waver here a little bit, I apologize to this, but this is vitally important. And I'm probably in the record for the most speeches now at the Chiang Mai Expat Club, would be my assumption. I've been a sponsor for 5 or 6 years now, and you guys have always been an important part of my business. That's the reason why I'm here with 2 hours of sleep with this. Now, I'm not going to go too much in the past depth of what we already know has changed from the meetings I've had before, because we talked about the remittance basis of taxation. What changed here a few weeks ago was an announcement by one of the ministers who stated that they're going to move to worldwide taxation, okay? Now this will be a fundamental shift of what the new changes, what we've just recently had. Now the changes that are in effect as of January 1st is only the money that gets remitted into Thailand, you have to deal with tax issues. Now they've announced that the money earned before January 1st will not be taxed, only the money after January 1st. That's an announcement, not a regulation, but that's what the ministry is saying at this particular point. But if you have rental properties or pensions outside or dividends or interest outside of Thailand under the current rules, if you don't bring that money into Thailand, you will not be taxed in Thailand under the current new rules, okay? Now, worldwide taxation changes that dramatically, okay? Worldwide taxation means that on an annual basis, you will report your global income, no matter where it is earned, on your Thai tax return and have to deal with tax credits and all those things, regardless of whether it's brought back into Thailand. Here, do this. Now, the reason I say don't panic when I started coming up here was this has not gone through the legislature. This is not just a rule change. This is so fundamental that this will have to go through Parliament. Now, they were trying, I believe it was an airport tax to bring in for 9 years through the legislature. It failed. So we got a lot of calls and everybody panicking on this thing. Don't panic on it. This is what the ministry is saying they want to move towards, but they don't even currently have the regulations for the old changes, the new changes, not the new changes with this. But you need to be careful.
Sounds like the immigration department.
Don't worry about that too much, because that's going to take at least a couple years to come into effect. The rules as of January 1st are only the money that you're remitting into Thailand you have to worry about. Now, again, if you're a U.S. citizen, no tax on Social Security and these kinds of issues. Each of your tax treaties from the countries you're from will have very specific issues with this. We're still working on the big guide of this that we're going to publish. You guys will get the first copy of this to publish on your website as well, on what each tax treaty benefit will say on taxation of each type of income. Some of them will say, yes, there's no tax on a dividend received in one country, but paid into here. All those types of things can occur in tax treaties. Like the U.S. tax treaty again, if you're living off of Social Security and you're bringing that money here into Thailand, there's no tax on that Social Security in Thailand, just in the United States. And each tax treaty will vary dramatically on what it will allow and not allow. That's the reason we're going to try to publish a booklet on this online that you guys will get access to. Now, if you are really concerned about this and this is your forever home, what you can do though is before the worldwide taxation comes into effect, you could take advantage of the Hong Kong Thailand tax treaty. What that says is that a pension in Hong Kong is not taxable if you are living in Thailand. So if you move your money into Hong Kong and you take it out of Hong Kong, it will not be taxable in Thailand under any circumstances. And get this, if you are not a resident of Hong Kong, they do not tax the pension either. And if you are an American, you can use the Thailand American tax treaty and get free distributions of any pension distributions as well. But you really need to do that in a way that if you are looking at this as going to be your forever home, that's a way to avoid this if it goes to a worldwide taxation. Now, Lee and Ken are in the back. They work with Business Class Asia. They can actually help you if you really want to start that level of planning. They can help you deal with this. But there's ways to avoid this with proper planning, but don't panic right now on the global taxation. But do start to talk to those guys, because if this comes down to effect, you're going to have a certain window of where you can move out of whatever pension you may have overseas into that Hong Kong pension without having to deal with a Thai taxation. Because what they don't have in America, we have a rollover system. You roll from one pension type to another, it's free of taxation. Thailand doesn't have something like that. If you move to a global taxation, say you've got a QROP in the UK, you take that money out, Thailand will want to tax that QROP prior to it going into the Hong Kong pension. You can plan and minimize this to effectively zero across your income. But you really need to talk and think about that now and see how you can do this, because it's going to move into worldwide taxation at some point. I don't think this is going to be this year. I don't think it'll be next year. But the year later, it's probable, because in my opinion, the reason for this is Thailand is very heavily trying to get very active with what's called the OECD, the Organization of Economic and Cooperation and Development. This is a big global financial body that handles a lot of anti-tariff stuff. It gives a lot of free trade agreements, but it also tries to equalize the tax systems across multiple nations. Okay, so when the Thais wanting to join the OECD, one of their things that the OECD will want them to do is move to a global taxation with this. And and I will state this for a long period of time, guys. This is not really meant to go after Thais here, or sorry, expats. They're not meant to do this to go after you guys with this. They're trying to do this, and they're trying to broaden their base, and they're getting international pressure to do this in a real way to move the tax base up into a much more global system with this. Thailand's tax system has mostly been based on VAT. That's where the vast majority of the money comes into, and import tariffs. Income tax is really kind of a new field on this with it. Now I'm going to give one more point here to this, because I'll be here afterwards for questions as well. Get a little bit doozy from taking the no sleep last night, but in my opinion, the current new rules where the remittance basis of taxation are probably not really going to go into effect this year. Okay, at some point here, they will more than likely say they're going to suspend this and start this either next year. The reason of this is the Thais do not have the regulations, they don't have the forms, and they just don't have the people in place to do these types of tax returns. Somewhere around 250,000 expats here, and they don't have the ability to handle 250,000 foreign tax credit calculations of this. We have done one calculation last year. I think I spoke in February here, if I remember, January, to this, the end of February, January. We thought we were done with that calculation. The Thai Revenue Department just came back asking for more information, which was the same information we already sent them, because they don't know how to process one $700 foreign tax credit. Multiply that times 250,000, and there you would be underwater so fast they don't know how to do this. So act as if that's going to come into place for this year until they officially say it's suspended for this year or postponed, but plan in ways to do that. Now, they are stating more and more that one of the ways to do this is if you do have a Thai spouse who's not a U.S. citizen or just a Thai spouse, you, as the expat, can gift money from overseas to your Thai spouse, and that money would be a gift and free of tax. That's the loophole as it really stands right now. But one more issue on this. The Thai ministers have stated a whole bunch of things on this, and that doesn't necessarily comply towards full regulations at that moment. One thing they've stated in the past is they will now accept English language documents instead of needing a Thai translated document. okay, with this. With a Thai translated document, you can't just go to somebody and say, here's the document in English, here it is in Thai. The entire document, format and everything, has to be converted into Thai, and it has to be by a qualified Thai translator, officially certified translator with us. Okay? We had, again, that same client came back and they're like, no, we need this now translated into Thai. And we sent them back and said, no. Here's where your minister stated we will now accept Thai documents. It came back from the revenue department. That's a statement, not a regulation, guys. So the clarity on this is more like mud than it is like air with this. But if you have a question too, you need to move some money, give us a call. You guys always have a free half-hour consultation with American National Tax Advisors. No questions asked. We've been a long-time sponsor of the club. Feel free to ask a question. Ken and Lee are down there too, can answer a lot of questions as well. But for right now in the global taxation, don't panic, but start to think about where you want to be and how you want to plan if you do want this to be your home. You can go down to zero taxation if you still want to do that way with it. That's it.